Alrighty, let's begin by opening up TradingView and choosing a trading pair. We'll use Bitcoin USDT in this example, but you can go ahead and select any pair that strikes your fancy, but be it Forex, crypto, stocks, commodities, or indices. The options are vast, so feel free to choose the one that aligns with your trading style. Next, we'll need to pick a time frame that complements your trading approach. For the best results, I suggest using 5 or 15 minute time frame, but here's the cool part. You can actually opt from any time frame that suits you, ranging from swift 1 minute time frame to a more extended daily time frame. Now, to keep things super simple for even the newest traders, we'll be using just 2 free indicators. That's right, no need to spend a single penny on additional tools. So head over to the TradingView's indicator section and hunt for the Deadband cross detection. Once you find it in the results, just give it a click and it'll be added to your chart. The Deadband cross detection indicator helps you spot momentum when the price breaks out a deadband around an EMA or return to it. The deadband is like a zone or range around the EMA. Alright, now that the Deadband cross detection indicator is added to your chart, let's make some adjustments to optimize it for a strategy. Don't worry, it's super easy. Just head over to the settings and in the input section and look for the EMA link parameter. Change that value to 21. Next, locate the source parameter and switch it to close. Moving on, adjust the percent deadband to 0.1. And the percent bar threshold to 45. Now you can leave the style section as is, no changes needed there. Now take a closer look at the chart, and you'll notice that the indicator prints buy and sell signals. However, some of these signals might go against the main trend. To avoid trading against the market's direction, we need to determine the overall trend. But don't worry, I've got a simple solution for that. By the way, if you're interested in learning more about trading strategies and techniques, be sure to check out our TradeGenius YouTube channel. We've published over 300 videos for traders of all levels and it's completely free. Just hit that subscribe button and you'll have access to a wealth of valuable resources. Alright, let's get back to our strategy and add the second indicator to the chart. This one is called 10 indicators in one. Pretty cool, right? Just like before, head to the indicator section. Search for 10 indicators in one and click on it to add it to your chart. Now, to make sure it works best for our strategy, let's optimize the settings. First, go to the style section and disable all the buy, sell, and pivot options. Leave the rest of options enabled though. Next, head over to the Inputs tab and turn on the bar color option. After that, change the EMA2 option to 45 and the EMA3 option to 90. You don't need to touch any other parameters. That's all there is to it. Now we've got our dynamic view of indicators set up. Let's take a look at how to interpret signals. With 10 indicators in one tool, you'll see different color bars that represent various components of the market's momentum. When all bars are green, it's a clear sign that there's a bullish momentum in the market. That's when prices trend to rise. On the other hand, if all bars turns red, it means there's a bearish momentum, which usually indicates falling prices. Let's take a look at a short signal example on the chart. Check out the 10 indicators in one to validate the signal. As you can see, not all components are red, which means the signal isn't strong enough and you should reject it. The same goes for the long signal, where you see a red component in the 10 indicators in one. That's a red flag and you should skip the trade. Sometimes you might notice that some bars are green while others are red. This scenario points to a ranging market where prices aren't making a clear move in either direction. In such cases, it's best to sit tight and wait for a better opportunity, as entering a trade here could be risky. Now let's move on to the next buy signal. Check out the 10 indicators in one. You'll notice that all components have turned green. This is your green light to enter the buy trade. For the stop loss, set it slightly below the most recent swing low to optimize potential losses. As for target, aim for a 1 to 1.5 risk to reward ratio to ensure a profitable trade. And to ensure our strategy is reliable, let's do some backtesting using at least 200 trades on the Bitcoin 15-minute chart. Backtesting involves applying our strategy to historical data to see how it would have performed in the past. After dedicating time and effort to backtesting our strategy on the Bitcoin 15-minute chart with a sample size of 200 trades, we've gathered some inside results. The testing process took approximately 10 weeks, providing a substantial data set for analysis. We found that the win rate for our strategy came in at an impressive 66.5%, indicating that it performed quite well in identifying profitable trades. In terms of overall profitability, our strategy generated a remarkable 269% profit, showcasing its potential to yield significant returns. Furthermore, we calculate a profit factor of 2.98, which indicates that the strategy's potential gains far outweigh the potential losses. This is an encouraging sign, as it suggests that our approach has a strong risk-reward balance. During the backtesting process, we also examined the occurrence of consecutive wins and losses. We experienced 8 consecutive wins at one point, demonstrating the strategy's ability to capitalize on market trends. On the flip side, we encountered 6 consecutive losses, which is not uncommon in trading and serves as a reminder that no strategy is immune to setbacks. Finally, we assess the strategy's max drawdown, which measures the largest peak-to-trough decline in equity during the test period. In our case, the max drawdown was a mere 4.9%, reflecting the strategy's ability to limit losses and manage risk effectively. Overall, these results are quite promising and seem to validate our strategy's effectiveness. However, it's essential to remember that the past performance doesn't guarantee future success. An ongoing elevation and refinement will be crucial in maintaining the strategy's edge in ever-changing market conditions.